the 5 biggest mistakes that you might be making when it comes to bookkeeping.
Hey, it's Emily from Zenny, and we're here to answer all of your bookkeeping questions.
If you're a founder or any kind of business owner, bookkeeping might feel like a back of office task or something that you put off until later or something that you put off until you can hire someone else to do it for you. But let's be honest, the way that you handle your bookkeeping in the first 2 to 3 years of your business's life can quietly cost you hundreds of thousands of dollars if you don't handle things correctly. Mistake number 1 is confusing cash flow with profit. This can be a super common mistake because you'll look at your bank account and see, we've got money, we're fine. But cash in the bank is not profit, and profit is not runway. Modern bookkeeping solutions like Zenny will offer structured financials on an accrual basis super early so that you can prevent this blind spot from investors. Mistake number 2 is treating bookkeeping as just tax prep. A lot of business owners think that bookkeeping is only available for taxes and scramble during March to get everything done by deadlines in April. The problem is that bookkeeping isn't just about taxes. It's about decision-making and early decision-making that sets you up for success in the future. Clean, real-time financials help you answer a lot of questions like, can we hire 2 more engineers? Can we afford paid acquisition? Should we raise now or extend runway? Are we actually profitable by product line? If your books are 3 months behind, that means you're running on old data, and that means you're flying blind. This is super scary because you don't want to use old data when it comes to financial decision-making right now. This is where an AI solution like Zenny would come in handy so that you can have real-time financial insights into everything going on inside your business and can make real-time decisions with the proper data. The third mistake that business owners are making is relying on DIY finance and accounting for way too long. In the early days, founders do everything. They run sales, they run product, they run marketing, and they run accounting. Bookkeeping has a hidden complexity that's really hard to do when you're focusing on every area of your business, not just that. You have to focus on revenue recognition, deferred revenue, contractor classification, multi-state tax exposure, SaaS metrics alignment, and so much more. QuickBooks plus a spreadsheet works until it doesn't. The cost of messy books can really catch up to you and be super inconvenient when you're ready to raise a priced round, you go through due diligence, you apply for venture debt, or you consider acquisition. Cleaning up 2 years or even more of bad bookkeeping can cost you tens of thousands of dollars. This is why a lot of VC-backed startups move towards structured bookkeeping firms or AI-first providers like Zenny earlier than they think they should. It's not about luxury, it's about protecting optionality. The fourth mistake that you might be making is not closing your books monthly. This is huge. If you're not closing your books every single month, you're just guessing. A proper monthly close includes the following: reconciliations, revenue recognition, expense categorization, accrual adjustments, financial statement generation, and other financial reporting that's asked for by your board members or other investors. Without those things, your burn calculations are probably going to be wrong, your margins are distorted, your board reports are messy, and your forecasts are unreliable. Your board members and investors probably expect a super tight monthly close. Speed matters, but accuracy matters even more. The final mistake that you might be making is separating bookkeeping from strategic finance. This is a big one. Founders often separate bookkeeping from financial strategy, but if your books aren't structured correctly, then your financial strategy isn't going to be either. Good financial operations should include bookkeeping, bill pay, payroll, forecasting, KPI tracking, and scenario modeling. The most effective companies today use an integrated finance stack. In this stack, AI would handle the transaction level bookkeeping, and finance teams use that structured data for strategic insight. That's the shift that's happening right now on finance teams. A modern finance tool like this might include an AI-first bookkeeping solution, just like Zenny, that automates bill pay tools and has real-time financial dashboards. Clean books are leverage that you can use at every stage of your business. Like we talked about in the beginning, oftentimes bookkeeping doesn't feel super strategic. It can be something that you're waiting a really long time to do just because you keep putting it off, but it actually is so strategic and so important. Your financial foundation matters just as much as your production architecture, so it's so important to pay attention to your numbers and your finances as early on as you can. Just like messy code slows engineering, messy books slow any kind of growth. If this was helpful, I hope that you subscribe, leave a comment, and ask questions that you have about bookkeeping that we can answer in the future. Thanks again for joining me, and we hope to see you next time.